Hey everybody, and welcome to today's Sunday market update for the 18th of July 2021. My name is Paul Bottrell. I'm the founder of Actions to Wealth Online Trading Profit, and I'm a man who's lucky enough to be surrounded by an amazing trading team. And we're about to get the insight into the market for the next week. Not just on Forex where we specialise, we're also going to have gold covered, crypto covered. We're going to have a look at the market macro, the macro market overview. We're going to have a look at fundamentals. We're going to have a look at data. We're going to have a look at technicals. We're going to do the whole thing. At the end of it, you'll see a comprehensive view of the market for the week ahead. And later on, we'll divide these up and split them out into small sections for you so you can watch the individual one that's of interest to you if you choose to. I'm going to start today by our macro markets master, Julian McCree. How you going, Julian? I just listened to your earlier macro market session. Certainly an interesting time, macro markets. Not as clear as perhaps would like. A lot of different opinions, as always. It's never this macro market, macro overviews are always different, but a lot of variety at the moment and important stuff.
Yeah, thanks, Paul. I am good, thank you, and I hope everybody out there is well as well too. There seems to be some crazy weather going on in the world at the moment. So, hey guys, why don't we crack into this? Just hold on 2 seconds while I just get myself going here. And hopefully everybody can see my screen. Just as always, little disclaimer, we have to chuck up on things. Look, there's 3 key themes that are going on in my world at the moment, which is inflation, the fiscal deficits, and what's happening with the pandemic. Fiscal deficits will park because it's summer and there's nobody in government at the moment in the Northern Hemisphere, which really leaves us with inflation and the pandemic. And I don't think there's a surprise. US inflation has come out crazy levels, crazy high levels, highest forever and ever and ever. And we've also seen higher inflation in other jurisdictions as well too, because New Zealand came out with inflation up at about 3.3% this week. Now, my difficulty is I'm a believer in inflation as it stands today. I'm not a believer in anything other than that being a transitory event. I think there's going to be some problems down the road. When you look at what happened with the RBNZ this week, so their response to the inflationary spike was to immediately end QE purchases, which is, to all intents and purposes, a tightening. What you'd expect to have happen is roughly what happened. So the Aussie Kiwi, that chart on the left-hand side, it fell quite a lot. However, quite a lot is by recent standards, not very much. It only actually fell about 1.25 points. So hardly a runaway bear or bull market, depending on which way around on that currency you are. And more importantly, on the right-hand side, we see what it did against the US dollar, and I cannot find anything in there. There's almost nothing happened whatsoever, so no breakaway movements there. So what's really going on? What's really going on here is something that's worrying me a little bit, is that it's saying, well, if the Kiwis are starting to tighten, you'd expect to see their currency rally because that's the normal playbook here. So the fact that it hasn't against the US dollar suggests to me that there's more powerful forces at play here, guys. So just bear that in mind. Sort of against the Aussies, sure. All sorts of problems in Australia right now. That sort of vaguely makes sense. Against the US dollar, well, that's interesting, isn't it? So let's examine my inflation thesis a little bit more, right? So my challenge is inflation rate is picking up everywhere, and I'm sure it's going to possibly go higher everywhere else. Who knows, right, over the course of the next 3 months or so. After then, I expect it to fall away. Why do I expect it to fall away? Well, when you look at things like this chart on the left is one of the reasons why. Okay, this is the chart of lumber. Now, it's a terrible market to trade. I don't recommend it. Anybody who trades lumber, there's easier ways to do it. Look at CUT or wood, which are 2 ETFs in the States to think about. But the reality is, guys, the lumber price rallied so much up to from October, November through till May, and has since collapsed all the way back and almost more. Right? So where's the inflation? What happens is we saw that supply shock, that supply tightness, whatever you want to call it, right? Demand pull, supply push. I don't know how else you call it, financial speculation. Toss that in there. You had that rip-roaring bull market. And here we are 2 months after the highs, not even 2 months after the highs. We're back now down beyond the lows of the year. And we're in danger of going back to the average price for the last 5 or 10 years, which is somewhat a lot lower, down in the 200s, right? That seems ridiculous given it's at 500 now, but it's a risk, right? So when you look at this, you think, well, where can this go if this really is all over for lumber? Well, the answer is 90 to 85 to 90% decline, which is somewhere in the region of the 200 to $250 mark. So don't say that to anybody else in any other market. But these are some of the possibilities that can happen when you unwind this financial speculation that we've been going through, right? So when I look at what's happening in the world, these are the things that are worrying me and the things that are bothering me a lot. So on the left-hand side, you have the 10-year yield, right? Why have yields fallen for the last 3 months as inflation has gone up? Why are we sitting on the low point in yields almost for this year in the 10-year note, and yet the US dollar is strengthening at the same time? This suggests to me that there's a shortage of collateral and there is a shortage of US dollars out there. So what does that mean? Well, that really means that people are trying to put their money into treasuries and they can't do it. Well, why is that? Well, maybe because the Fed owns quite a lot. But the reality is, whatever the reason is, there's a de facto tightening going on, which means that whilst the government is spending lots of money, it gets hidden. When the government stops spending lots of money, maybe some of that may come out. Back to my transitory inflationary argument. Then finally, when you think about the real economy, what's happening in the real economy, what's going on today, right here, right now? Well, here's 5 sectors that I can show you. So energy sector, transportation, so think FedEx, right? When you think transportation. Okay, the materials sector, the mining industry, every single one of those has seen significant losses, bear market equivalent losses, right? And yet on the right-hand side, the S&P is going all guns blazing to all-time highs, right? So that real economy that everybody's talking about, the individual stocks are telling you it's not recovering. So if it's not recovering, what future is there for inflation? And guys, finally, the last thing I want to focus everybody's attention on is this shift from pandemic to endemic. Maybe Ash can talk a little bit more about Freedom Day, which I think is tomorrow, if I recall, in the UK, and what that's going to mean. What people are doing is they're moving from trying to manage a pandemic to trying to live with an endemic. And I think that's the key thing, right? You're going to start to live with it. So once you get everybody vaccinated or enough people vaccinated, you can afford to live with it. The trouble is, Asia is not vaccinated yet. Asia collectively, outside of China, is in very low vaccination levels, especially Oceania. It's awful here. So then you have another problem where I say if the Delta variant breaks out, as it is doing in Australia, then what's going to happen? Well, what's going to happen is you're going to have a direct hit to the economy. Any length of time, and you can easily construct a underperformance for those currencies, right? So think in Malaysian, think Indonesian, right? Think maybe Singapore dollars, because cases are rising there as well too. So there's plenty of situations in Asia where things aren't as good as they could be at the moment, and where things can go awry. So that's my quick scoot around the world and my sort of thoughts. So guys, if anybody has any questions, then throw me at me. And Lewis has come back with one, which is the US government asset purchase played a big part in the current situation in US dollar 10, I think you mean 10-year yield, or in the US dollar and yield. So look, the short answer to that is, of course it does. If you're buying as many as the Fed is doing every single month, it's going to have an impact. The issue is it going to create inflation, or are they just staving off a deflationary environment? My view is they're staving off a deflationary environment by doing it, which means the minute they start to tighten anything, you have those deflationary forces will kick back in again. So I hope that answers the question. Paul, thank you, mate, and back to you.
Cheers, Julian. Certainly going to be interesting to see these. Just have a look at some of these nations that have got COVID under control and are going to open up their borders. They're doing particularly well. The UK, ready to go now. They've got it under control. They can live with it. A mere 54,000 cases yesterday and 41 more deaths. Boy, their version of if we had they had 41 deaths. If we had 41 cases in New Zealand, we'd be locked in our houses for a year.
Yeah.
But it's going to be interesting to see what living with COVID looks like for some of these places. Again, the US, heavily vaccinated, life's going back to normal. 24,000 cases yesterday and 113 deaths. So we're doing really well. We think we've got it under control, and we're locking down half the planet, and we're still killing 7,000 people a day. I suspect that maybe, just maybe, we're not quite where we think we are with this thing just yet. But, I've been wrong before and I'll be wrong again, no doubt about it.
As am I, Paul, frequently. So,
But yeah, really interesting to see what happens whether the UK goes through with this tomorrow. If they've got 54,000 cases a day under some restrictions, take all the restrictions away, have a party to celebrate it, that's going to go to 100, 200,000 cases a day. Those death numbers are going to go from 40 to 200 or 300 a day. Well, this is the whole thing. Will it inundate the hospitals to the point they can't cope and we have another India? Well, they're saying, and probably not, because vaccinations should stop that, but that's the gamble, because if it does, boy, it's going to take some explaining.
And I think because you're left with younger people who are more resilient to this, generally, not individually, there's always those horror stories, but generally they're more resilient. That should mean less hospitalizations. In which case, how long does it take, guys? Just get your calculators out. Of 50,000 or 75 or 100,000 a day. If you include vaccinations as well too, you're probably north of 300 or 400,000 people a day are either getting it or being protected from it. How long does it take to vaccinate the entire population, either one way or the other, right? And I think that's the key thing, right? You could almost be done in 2 or 3 months, and then the UK's forging ahead without anybody being affected anymore.
Vaccination does appear to be the key, and I've got to say, Chris just said that us in New Zealand are very, very lucky. We are very lucky. We have had the UK variant, the South African variant, and the Delta variant come into New Zealand and no one catch it. And really and truly, that is not that. And what's more, they've come in, they've gone to massive public places, and we've still no one's caught it. I think that is good luck, and we'll take it. No doubt at all. In this country, we will take it, and we need to, because we have the lowest vaccination rate in the OECD. So that is, if it got here at the moment, it would still cause genuine carnage. Thank you, Julian. Much appreciated as always. I thought your earlier session on macro markets was brilliant. If you've got a bit of time to watch that, guys, do go through and have a look at that. It does give the stuff in a little more detail for you. Once a month, Julian comes in and provides his macro market overview.